Hey everyone, welcome back to Yuri's Box. In this video, I'm going to be talking about TLT. If you like this kind of content, consider leaving a like and subscribing to the channel. And as usual, nothing in this video is financial advice. So we kind of have a stagflationary trade going on today. And really that is in response to the data dump we had, it ended kind of like a quarter of an hour ago, 15 minutes ago. And really the morning started off with ADP coming in at 62k. So again, you have the stag part coming in via ADP. And then you had a cascade of other data points. Mainly what seems to have spooked the market was this, the GDP and core PCE price indexes. And again, this isn't surprising given everything we've read in the PMIs and everything, the beige book, there are indeed inflationary pressures. All right. As far as the for the month of March, the PCE read came in flat, which was lower than expected. The core, another read, where is it? Came in a bit hotter here. PCE price index year over year came in a bit hotter at 2.3 compared to 2.2 consensus forecast. So again, as far as TLT is concerned, we do have again a stagflationary kind of trade going on today. Again, coming off of the ADP report and some of those price indexes coming in a smidge hotter. And if we go into detail for the ADP, for example, 62k, I still maintain my 75k forecast for Friday, and I think that this kind of sums it up quite nicely. Neela Richardson from ADP, often see her on Bloomberg surveillance. In her own words, unease is the word of the day. Employers are trying to reconcile policy and consumer uncertainty with a run of mostly positive economic data. It can be difficult to make hiring decisions in such an environment. And again, this is kind of consistent with my reasoning of why I'm giving a 75k forecast for Friday, because again, everything that we've read in ISM, not ISM, we'll get them I think tomorrow. PMI reports, beige book, regional Fed surveys. We're still not at a point where everything is falling off a cliff and you have to head for the hills, all right, and hide in a bunker. We're still not at that point. Things seem to kind of hang in there still, but there is a lot of darkening outlooks. Conditions aren't as favorable as they used to be, say in November, for example. So you're kind of trying to balance two things. And again, 75k, as far as I'm concerned, is consistent with a meh report. That's the way I've kind of put it, where you don't have necessarily things falling off a cliff, but you don't even have a great number, all right? Because all of the current conditions don't really allow you to have blowout numbers. So again, to put it in, you could say it would pull a Chernobyl. All right, not great, not terrible. 75k. Again, I wouldn't get too excited about this number right here because generally speaking, ADP is very poorly correlated to the non-farm payroll report. It comes out on Friday. Regardless, we'll see how non-farm payrolls comes out on Friday. Personally, I'm still expecting this doesn't move the needle. I'm not changing my forecast just because of this. I remain my idea of 75k. I would try to. I'd like to think that we won't see a negative report. I've seen Torsten Slock by Apollo talk about this in a report they released recently, that given the fact that the survey week was from actually April 9th to April 16th, which is right smack in the middle of the fallout of Liberation Day, you could actually see a negative payroll report. I would tend to disagree with that. I think we'll see something that is mediocre. meaning 75k. But again, I could easily be wrong. Well, we could even have 200k. Who knows? But we'll see how things evolve. As far as TLT is concerned, going back to Old Faithful here. Again, we do have a stagflationary trade going on where you have, yields rising just a smidge. We're up by a couple of basis points. We're kind of going a bit lower now, if I'm not mistaken. Yeah, I mean, we were up at 472, which is, basically 10 basis points up compared to where we were just before the data dump. And I want to go back to the 06-08 comparison because, and I really, just to reiterate something here, it's whenever I talk about inflation and I try, and honestly, I can see how you could think that I'm minimizing inflation, and I don't think that inflation has a role to play. That it's not precisely like that. I do believe that inflation has a role to play, but it's put in relation to where we are in the economic cycle and where growth is. I expect inflation to put further pressure on growth, simply because, as we've seen this morning, I don't think, let me see if I can find it here, but wage growth actually was, I don't have it here. I don't remember where I saw it. I think Nick Timmeros had a good post about it. Wage growth continues to be somewhat sluggish. And again, you have prices going up, wages staying more or less flat or not keeping up as much as with inflation. Overall, that will have a negative growth on inflation because, again, even if consumers will have to stomach some of the price increases, at the end of the day, if you don't have a way of getting more income, you'll end up paying more money for the same amount of goods. That's the moral of the story, all right? And again, going back to 06 and 08, I think that this is even more relevant given, this kind of environment we might be entering. Because inflation back then bottomed in October 06, all right? We bottomed out, just to get things right here, at 1.3. Then we had a higher low in August of 07 at 2% on headline inflation, that is. And from then on, we went on a tear, all right? We went up to 5.6, which was the top for July of 08. And again, what happened afterwards was that it just fell off a cliff, right? And this is kind of the way I'm going about with, with inflation. Really, is that yes, inflation could become there's the potential for inflation pressures, and we're definitely already seeing that. All the regional surveys that we went through definitely make the case, a strong case for that. But I think you'd have to. I'm in the camp that you need to look through that because the economic backdrop won't allow rather the U.S. consumer to stomach those price increases. And I think that this idea that companies will just pass on the price to consumers easily is a bit of a pipe dream. Again, we will definitely eventually. We will probably see prices go up. I'm not debating that. I'm debating the fact that given where we are in the cycle, people will most likely have to call it quits. Basically, it'll cause demand to suffer even more, all right, to decline even more. That's the way I'm going about inflation. Sticking with 06 and 08 for a minute. Again, from August of 07 to July of 08, we went up, from 2% to 5.6%. And it's worthwhile remembering also what was non-farm payrolls doing in exactly this time frame right here, from August of 07 to July of 08. So from August of 07, we had, August of 07, we had negative 25K. But from then on, we went on to go have, a bit of a run. We had the highest read at 116K in November of 07 and 105K in December of 07. However, you've already seen seen the chart. You already know where this is going. As we progressed through 2008, we reached July of 08, and we are at negative 200K on non-farm payrolls. And I stress, ignore the numbers for a minute. Think about what the prevailing narrative would have been in exactly this time frame, from August of 08, of 07 till July of 08, where you have negative non-farm payrolls and inflation surging to 5.6. Imagine what it would have been like in July of 08, where you have inflation coming in at 5.6 and negative 200K on non-farm payrolls. Stagflation galore. And in fact, this isn't, if you've been following the channel, this isn't something that is new to you. Throughout 08, we saw many times rates move up. All right, this is really not cooperating today. Here we are. So, where would August of 07 be? Let's move on the monthly here for a second, just for simplicity's sake. August of 07 puts us right here. We were at basically, what was that? 483 on the 30-year bond. In July of 08, we were at 465. That is basically 17 basis points, 18 basis points, all right? The 30-year hardly moved in the face of negative payrolls. The only time we saw really rates take a tumble was when it was impossible to ignore. All right. And again, keep in mind, from here till here, we had inflation go up to 5.6%. We were, in fact, in stagflation galore. We were at a point in time where you had inflation moving up, and this was basically, a lot of it had to do with the move we saw in oil. Oil back then was soaring I think it peaked at around 110, 115, if I'm not mistaken, maybe 120. I wouldn't, just going off by memory there. But again, regardless, we had inflation go up. And this was 2 months before the collapse of Lehman Brothers. And again, just to reiterate, during the worst part of 08, meaning during the collapse of Lehman Brothers, which is right here, we saw even then rates move up. All right. So again, just to reiterate, the direction of travel for TLT, as far as I'm concerned, this has been my base case ever since I started making videos. I'm open to changing my mind, but as things stand right now, I see no reason to do that. Eventually, hopefully, I won't get a reason to change my mind. But if I have to, I'll definitely change my mind. Regardless, as things stand now, I think that directional travel for TLT is up and rates are down. Now, that doesn't mean that you can't have hiccups here and there. Looking back at 2008, for example, we had plenty of that. All right, we had plenty of examples, and we do have plenty of examples where even in the face of extremely bearish news for the economy, like Bear Stearns collapsing, that was probably one of the first major red flags that we had. Rates went up. All right, and they didn't go up by a couple of basis points, or they stayed flat. No, from March of 08 and really January of 08, They went from, well, let's just measure it out. I should remember I've said this millions of times. I really should remember. We went up by 60 basis points. All right. While we were having negative payroll numbers. Okay. And it's important, I think, that we remember collectively that, and try to put yourself in the shoes of an investor that was living through this moment right here. We didn't have social media. We didn't have X. Probably we were all a little bit more chill overall. But you see inflation move up. You see non-farm payrolls go down. What do? Well, you probably sell bonds. And that's what a lot of people did. But time goes by. Eventually, as I'm arguing for today, excuse me, back then, eventually inflation, yes, it moved up. But eventually it fell off a cliff and we went into deflation. Will we see that this time? Time will tell. I'm definitely leaning more in the camp of actually, inflation just hindering growth even more. All right. Simply because, again, people are more likely, in my opinion, to call it quits. Say, I won't buy whatever I have to buy. And even if companies manage to, increase prices, given the fact that, I always call into question the quits rate, for example. And yes, while we had a move up, the last report, we are still at cycle lows. And a quits rate being at cycle lows is usually an indication that people don't see, a red hot economy, meaning that they don't think it's a good idea to switch jobs. They're going to stay put, and if they stay put, it's more likely to see wage growth be sluggish, meaning that any bout of inflation in the face of a sluggish wage increases just leaves people in a position where you're spending more money for the same amount of goods. Again, I make the example of a car, for example. Let's say that you have 10K at the end of each month to spend on whatever. Let's say you have to spend, before tariffs, you had to spend 5K on down payment for a car. You have 5K left to go on restaurants and cinemas and zoos and whatever. All right? Travel. Tariffs roll on, come onto the scene. Price increases on the car. You're spending $7,500 on a car. Well, that just leaves $2,500 to spend on everything else. So before you were spending 5K on everything else, now you're spending $2,500, right? So that's kind of my interpretation of where we're likely to go in the future. Again, it won't be comfortable. And again, as a user, I don't remember the name, really said, it's kind of like the elevator up. The escalator up and the elevator down. I think I got that correctly with TLT. It's a slow grind up, and then when it just goes down, it just rips down. Again, it'll be quite a we'll have hiccups along the way. It'll be a volatile way up. And just remember, by the time, you get the kind of return you want in something like the 30-year bond, it's usually when, it's clear as daylight where we're headed. And as of right now, it's still not clear as daylight. We still have this dichotomy where it's like, is it growth? Is it inflation? Again, my personal opinion is that it's growth, but, we're in a cycle, as I've said many, many times, that is more consistent with the pre-2008 world, meaning you have to constantly think about both things, both sides of the equation, which also, just to close everything off, is probably the key ingredient as to why just to call the Fed into question, is usually late. Because they're kind of paralyzed. They get into this position where they're kind of paralyzed and they don't want to do anything because, if they cut rates and inflation comes up, like, we saw, inflationary pressures come up in the data today, then everybody's going to scream at the Fed, what did you cut rates for? So again, you're in a situation where everybody's kind of paralyzed, and things kind of stay like that until something comes and just rips the band-aid off. But I think we're still a way away from that. And again, it is a process. It'll be volatile. It'll be messy. You'll have, these moves right here, for example. Which again, just to, I'll promise to finish off the video now. But the more we move away from, really the week of April 7th, I just think my first initial reaction is potentially possibly the best explanation to what we saw right here, meaning that it was just forced liquidations. I'm definitely pleased and relieved that we haven't seen any follow-through for the time being. But again, that'll I don't definitely want to call victory on that just yet. Things can definitely turn on a dime very, very quickly. I'll leave it at that. If you like this kind of content, consider leaving a like and subscribing to the channel, and I'll see you next time. Bye.